Welcome to Charts Today. My name's David Linton, and today's edition for Wednesday, the 27th of October, comes to you from London. And we start by looking at the dollar. Seeing quite a lot of red on the screens this morning, so markets just looking a bit more subdued. So the dollar has had quite a good few days, and it is bullish above the cloud. Remember, this is my weekly, my daily, and my 60-minute chart with the corresponding point and figure targets. Long-term, medium-term, and short-term view of the markets. If we're above the cloud, we're bullish. If we're below the cloud, we're bearish. That's simple. So we're seeing here that the dollar is looking strong pretty well on the medium and short term. We just have more work to do to get back into bullish territory on the long term, but of course that will be the last to change. It does look like the dollar is seeing a resurgence, and that has implications for a lot of markets, of course. The euro, therefore, is weaker against that stronger dollar, and again, we are not far now from breaking down below the cloud, so that is something that we're watching for. We pulled back a little bit against the Japanese yen. This is normally a good lead indicator for the dollar. The 114 level was this key, but we've got a target here as high as 161. That's a 40% increase against the yen. Of course, we have to break higher. Shorter term, we've got targets of 4 and 11% higher, and we've got a short-term target of 3% higher. So that dollar strength is really going to be quite key. Sterling sitting at 137.50 against the dollar, just weaker and rolling over. This 150 target now looking less likely, so stronger dollar the theme there. But sterling is holding its strength against the euro, sitting at 118.50. Did nudge 119 yesterday, so sterling making 18-month highs has the upper hand against the euro. Looking at the S&P 500 index, we're up slightly yesterday. Of course, there was good news across the markets in tech, and we're seeing the Nasdaq just edging higher, not yet making a new high like the S&P, but pretty close to doing so, again with good upside targets. And the futures today are up very slightly. Hard to call the market really based on just 0.14% increase on both the Nasdaq and the S&P future, so probably a flat opening today. And the VIX volatility is lower, down below the 16 level, so the fear index is low. Markets are fairly sanguine at the moment. FTSE future down slightly. The DAX in Germany down 0.25% this morning. The CAC 40 down very slightly. So just seeing Europe down a little bit. Japan was a little changed also. We are seeing the Hang Seng quite a bit lower, down 1.6%, and the Shanghai Composite down 1%. The Sensex in India is up 0.2%. So that market's still looking very good. We've got good upside targets. That's the place we're heading there. And the S&P Australian Index, little changed. Looking at soft commodities, we're seeing a little bit of a pullback, weak down 0.75%. Still looking very ripe for a breakout long term. We've got multiple upside targets. So that's a key thing with soft commodities. Of course, the dollar having an impact there as well. Gold back below that 1800 level, just can't break and hold that level, so that's quite key. And silver also lower, so we're just seeing precious metals struggling there. US 10-year yields are sitting at 1.62%, just falling away a little bit, having moved higher. We still have these targets of 175, 179 in place, and the German bond future just recovering a little bit. This is certainly one we're watching at the moment. A new low below that 2020 low would be bad news, so just one to keep an eye on. Looking at the energy mix now, it's a sea of red this morning. We've got Brent Crude down 1.2%, so heading lower there. WTI down 1.5%. US nat gas, having really rocketed on Monday, is just pulling back now. We've got targets in either direction on the 1 minute chart. Remember, if you're trading the 1 minute chart, that's going to be the key. Looking at coal, we're sitting below that low that we saw on the 7th of October, so that is quite concerning for coal. We've got targets of 105, 113. This is on the 1 minute. Use these targets on your OTC data. You really can't afford to be out them. And on emissions, we're down 1%. So again, looking weaker here as well. We were neutral emissions this week, and it does look like we're pulling back. Looking at gas, we've got UK gas down very slightly this morning. Really the key here is this trend, and if we look at the key levels here, it's really 270, 207. That's what we've got to watch on the emissions chart. TTF, we're seeing here, also has a similar trend, so that's going to be key to watch there as well. And if we go to German power, we see the same trend playing out here. 118, 137. We take out these lows, that's going to be key. On the 1 minute chart at the moment, we do have downside targets of 2, 5 and 8% on German power, an upside target, but these downside targets starting to rule. Looks like we may break lower, and of course that would be bad for the price. This increasingly looking like the top for power markets. That's it for today. Until tomorrow, happy charting. See you then.